Boy, here we are going into Easter weekend. Guy, somehow last night I found myself sucked into Game 7 of 2013 Spurs Heat NBA Finals last night
Is
on
that
ESPN.
so?
How is that
Duncan's
possible?
there. D Wade's there. I mean, was the Admiral still on that team or no? He had retired long before, right?
The Admiral was like in the 80s, man. I mean,
Yeah.
let's be clear.
Look, I haven't watched. Just for the record, I haven't watched an NBA game in its entirety since Larry Johnson drained the 3 and 1 at the Garden, I think, against the Pacers. Number one. Number two.
Sorry, keep going.
You find a reason. You're all knotted up. Typically, I'm the one knotted up. What's going on there?
Well, this is actually my Easter tie. It's the Liberty of London tie that my mom gave me, and I'm feeling look. Let's enjoy the weekend with families, holidays around the world, and important times. And unfortunately, we're not going to be watching much in the way of fresh sports action. And I agree with you on the NBA. Sorry, folks, but you kind of lost me there. But I'm going to slowly unrobe, and I don't be scandalized at home. But as I take this off, I think it's all very relevant for what went on in the markets today. I mean,
well, just quickly before you do that, remember you have a mic on, so don't take too much off. Okay.
Yeah. Thank you. Well, I'm gonna loosen up. I'm gonna loosen up, and I got something to get off my chest anyway. Hold on. I'm loosening up. But I mean, I got to tell you, dude, the Fed off the rails. And I hate to quote Ozzy, but we're going off the rails on a crazy train here, man. Pick your train song. And by the way, there's a bunch of them. So, I mean, what happened today was absolutely nuts.
Well, my favorite train song is obviously Train by
Blackfoot.
Blackfoot. And I love that song because the Road Ducks did a cover of that at the pub at Georgetown circa 1984. And it's just a tremendous song. Great harmonica. Obviously, Tuesday's Gone by Skinner mentions trains as well. What are you thinking?
Well, I mean, how about a little Soul Asylum and a little Runaway Train Never Going Back? Soul Asylum was kind of, you probably were too cool for that in the 90s. How about, I got to tell you, the Fed's on, talk about the OJs, the Fed's on a love train right now. I mean, all they want to do is seemingly make everybody happy and be, essentially saving society when in fact they're turning us into socialism.
Well, it's funny. I agree with it. I said on the show tonight or earlier tonight that, it's the irony of Bernie Sanders basically dropping out of the race when we basically go full socialism isn't lost on me. And that's exactly what it is. I mean, we don't mean to do it, but effectively what we're doing is privatizing gains and socializing losses, and in some ways encouraging bad behavior. And you said something on the show tonight that really resonated with me. You said people were getting their faces ripped off by this move in the Fed. And that's true. And it's not just people speculating, but it's people that were trying to do things properly by hedging risk that are now watching those hedges blow up in their faces for effectively the wrong reasons. And that to me is somewhat problematic.
Yeah. And to explain it to folks, I mean, what the Fed did today was essentially they agreed there was a $2.3 trillion Fed additional bailout on top of the other $2 trillion they've thrown out there, on top of essentially $4 trillion that the government's put out there. So we're getting near 10 trillion. But today's package, one of the keys to it was that they're targeting high yield debt, and they're going to actually buy the corporate debt of downgraded companies that have gone high yield, and it's taken. It absolutely crushed people in the high yield market. And what I'll say from the hedge fund perspective, it's going to be pretty interesting to see, the haves and the have-nots coming out of this. I think there's going to be a lot more pain. I think people have been destroyed by this recovery. And so far, this has been a V-shaped recovery. And it has been a case where, again, if you listen to Jerome Powell, I mean, today he said, we're going to do not only whatever it takes, all that language, forcefully within the boundaries of our powers under extreme moments or whatever the interpretation of it is basically the Fed's doing what the White House is doing. And we thought it was helicopter Ben. We talked about this the other night. We've never seen anything like this. And so the accountability, both for investors that were on the wrong side of the trade, the accountability most definitely for companies. I mean, seriously, where's my bailout? no one's, and no one's going to, by the way, feel too sorry for me. But this is the point. And in fact, we should manufacture these T-shirts because most people in our country deserve this T-shirt. And it's a function of the financial oppression we're all forced to live under. Zero interest rates, by the way, now effectively for a decade means that people who want to save are getting nothing. And they're actually encouraged to move out the risk curve and walk in front of what? The runaway train.
And that's
coming right down the tracks.
And it's just, again, I mean, it's a much longer conversation, and it's clearly, people will misinterpret what I'm trying to say. I want people to get through this, but I don't want it to be at the expense of people that are trying to do things right all along. And effectively, that's what's going on. But like, away from that, next week's a big week. We have a few days to think about it. Tomorrow, obviously, Good Friday, markets close. Earnings next week. Does anything jump out at you, or does it even matter at this point?
Well, we've talked about the banks, and I think the earnings that the banks are going to tell you are not going to really obviously tell the story. We are going to get Q1, and obviously we're going to have March numbers in there, but it's really about Q2. It's the guidance, and the banks are going to have to tell you what they're seeing so far. They're probably going to spend most of the time talking about this PPP. So, I mean, banks are the most important. They're always the most important, and they typically lead off earnings season. But then, then there's some others that I think are really important. And a Macy's isn't terribly important, but boy, talk about a team that's playing back into 2013 levels. Macy's was probably at its peak at Game 7 between the Spurs and the Heat as well. I mean, this is a company that's really been not only dead money, but it's been destructive money. And existentially, I think actually they're going to have a tough time coming out of this. They were a company that was very troubled going into this. So again, it's about the credit story at Macy's, and it's about the debt. And the reason why Macy's is up 50% in the last 4 days is not because anybody thinks they're going to recover coming out of this. But if anything, if you're playing Macy's at home, don't play it for the dividend, play it for the asset base and play it for the real estate. And that's been something that at times has been really important for the stock. What are you watching, guys?
Yeah, it's the banks to me, and it's interesting. We talked about this a couple of weeks ago when J.P. Morgan, which I think troughed around $78 or $79, but on the bounce back when it was trading 84, what we said to folks, and it's something if you want to take 10 minutes and look at, last time J.P. Morgan reported earnings, they said tangible book in the stock was $62. If you recall, J.P. Morgan got up to about 140 something. So you can do the math, and you can see a stock was trading well north of 2 times tangible book. Well, you could say $62 is not going to happen. So you make it 55. When JP Morgan was trading $84, if you assume a 10% or so haircut in tangible book, you were still able to buy that stock at 1.5 times price to tangible book, levels we haven't seen in a long time. And now the stock, I think, closed around 103. The inclination is probably to take profits. I think that's the wrong inclination. I think JP Morgan go higher. I understand what you're saying about earnings and guidance, but to me, it's about what they say, what is tangible book in JP Morgan, what's the market willing to pay for it?
Yeah, and again, to take it back to sports here, I mean, I think a lot of these guys are playing for next year. This is not, it doesn't really matter what happens in 2020. And if you look at banks, for them to get back to normalized earnings, we're actually probably, we're going to hope we're getting a high draft pick this year. And we're probably going to dabble in the free agent market a little bit early next year so that in 2022, we can be playing for the same prize that we were playing for in 2020 before all this unwound. So, so with that, man, I hope the Easter Bunny finds your house. He's probably a little disoriented. And happy Easter to you and your family, guy.
You too. And everybody out there, enjoy the long weekend, and we'll catch you guys all on Monday.
Be safe.